Frederick Manawa with Bitcoin.com. I've got the one and only Sergey Nazarov, co-founder of Chainlink. Sergey, welcome.
Thank you. Thanks for having me. Good to see you.
Are you enjoying Consensus?
I am. I've been at all of these since the beginning. We actually announced the launch of Chainlink mainnet at a Consensus. So it's kind of a milestone every year for the industry, and it's always interesting to see. It's kind of like a barometer for where the industry is. This year I actually see a lot of capital markets and institutional folks. So it's always a good event.
And that's what I've noticed too. So you were just talking with Charles Hoskinson, the co-founder of Cardano, and Eric Trump. How did that go? You're just on stage.
Yeah, that went well. So that was for World Liberty Financial and their stablecoin USD1, and Eric is a part of their team. And so that was about their adoption of CCIP, and which is our cross-chain connectivity protocol.
Right.
So their stablecoin can move across chains, and it was also about some of the great work that they're doing on USD1 generally for getting kind of global adoption distribution. That was the topic of that panel, and I think it generally went well. The thing that I found interesting was how Eric, and I know this from speaking also to his brother Don Jr., were pushed towards the crypto industry through debanking. So I think it was very interesting to me how like the censorship resistance of the Bitcoin industry and the blockchain industry is actually what attracted them after they experienced getting debanked due to political reasons. And so from the beginning of the industry, I think one of the main properties of Bitcoin and the main properties of our whole industry has been this tamper-proof censorship resistance, right? You can't be censored.
Right.
You can't be debanked. And it's fascinating that you see people that are so close to the political establishment that essentially have gone full tilt towards the crypto industry, including Bitcoin, including the other things in the blockchain space, going as far as themselves joining a crypto team because they experienced censorship, right? So that's the reason that they both give publicly and privately. So that's actually probably for me one of the most interesting things in that conversation, in addition to the stablecoin and the usage of the cross-chain interoperability protocol, CCIP, which they chose as their kind of provider for cross-chain connectivity. And cross-chain connectivity is something I'm interested in. It's very important, but I'm sure we'll get into that.
Yeah, and I think it's important that the Trumps went through that because now they know what other companies were going through, and they're more determined to get the right people in the right places to stop that Operation Choke Point 2.0 that we saw devastate the crypto industry. And I mean, for crypto, it was more debanking from an ideological perspective, but they also do it for political reasons with the Trumps. But for people who don't know what Chainlink does, you talked about, cross-chain connectivity. What does Chainlink do? What's the purpose of the company, basically, in a nutshell?
Sure. So Chainlink creates kind of the pipes between all things in and outside of crypto. In and outside of the blockchain space.
Right.
So for example, it feeds in the majority of the data that DeFi uses to power DeFi. It feeds in identity to create regulated and compliant transactions. It connects two chains or more together so you can transact between chains. Now we're starting to provide key computations off-chain through something called the Chainlink runtime environment, where you can actually compose all of those components I told you of identity, data, and cross-chain into one smart contract that works across chains. Okay. So Chainlink is really kind of a set of protocols and pipes that is now turning into a standard for how to build more advanced smart contracts, because you can't build more advanced smart contracts without connectivity across chains, connectivity to data, connectivity to identity. The best example of that usually people use to understand Chainlink is DeFi.
Right.
So DeFi before Chainlink launched was about 15 to 20 teams, less than 100 million in total value locked. Then Chainlink launched and DeFi rapidly grew to over 200 billion, with Chainlink powering the majority of DeFi. Chainlink still powers the majority of DeFi today, as it's at over 250 billion. And that's because Chainlink in DeFi's case provides a lot of data and now cross-chain. And so without data, you can't even have DeFi, because DeFi is basically a smart contract with financial product conditions that's resolved against data. So DeFi is a combination of a smart contract and what Chainlink makes, which is an oracle. And that's actually what DeFi is. It's those two things working together. Now you have kind of cross-chain DeFi, where you can buy into DeFi from multiple chains.
Right.
So then Chainlink provides that. The next version of DeFi is compliant and regulated DeFi, where you can have institutional capital flow in to DeFi because it can comply with various regulations like identity requirements. And so Chainlink is just providing more and more of this infrastructure and capabilities to, as an example, grow the DeFi vertical. But Chainlink powers a lot of blockchain gaming. It powers a lot of insurance applications that we think are going to go, good places in the future.
Yeah.
So all of these more advanced next generation smart contracts basically require oracles, cross-chain bridges, identity connections. And then we also do a lot of stuff on the capital markets side, where we connect the capital markets chains to each other and to public chains. We allow the capital markets to flow liquidity and capital into the public chain space. Once again, because Chainlink makes the pipes and the protocols that power those pipes and allow these more advanced smart contracts to happen. Like if you're basically thinking of making a next generation smart contracts 2.0 application like DeFi or some kind of capital markets based application on chain, you basically need Chainlink.
Right, so you use the word oracle, which some people may understand, some people may not. How would you define an oracle?
Sure, so an oracle in a computer science sense is anything outside a system that gives it access to something outside of it, right? Okay. So an oracle is kind of the gateway that allows a system to access outside things and to get information or proof about something outside of the computing system.
Right.
What Chainlink makes is actually a version of oracles that's decentralized, called decentralized oracle networks. So there are blockchain networks like Bitcoin or Ethereum or Solana or others, and blockchain networks generate blocks of transactions, and that's what their nodes and their network does. Oracle networks are also collections of nodes, but they generate consensus not about generating a block, but about verifying things. So like verifying some piece of data, verifying identity, verifying that a connection between chains is happening correctly. One good example is verifying what's called proof of reserves.
Right.
So Chainlink is the largest provider of this proof of reserves technology, where the Oracle network verifies that there are reserves to back the stable coin or the gold coin or the wrapped Bitcoin or some other thing like that. And that verification is very important because it makes sure that the on-chain representation of the thing is accurately representing the off-chain holdings.
Right.
So proof of reserves is kind of a good example that's becoming more popular now. And you have, I think there's going to be a regulatory push actually that proof of reserves will be a requirement, because it's very logical to prove that the on-chain representation of something has the corresponding off-chain asset that equals what it's representing, right? So that's what oracles do. They kind of verify things, and they can verify pretty much anything. They can verify an identity, they can verify a cross-chain connection, they can verify market data, they can verify all kinds of relationships with AI models. For example, we have Oracle networks where multiple AI models are run in the Oracle network.
Right.
And then the output of those AI models is used as an input into smart contracts.
Okay.
And so Oracle networks, they apply kind of this decentralization and consensus guarantee outside of the blockchain world. And so when you combine the decentralization and consensus guarantee of the blockchain with the decentralization and consensus guarantee of an Oracle network, you get these next generation contracts, right, that are guaranteeing reliable, tamper-proof, censorship-resistant outcomes, but they're guaranteeing it not only in the on-chain sense, but also in the off-chain sense.
Right.
Does that add up for you?
Yeah, that makes sense. I think with proof of reserves, which, by the way, became really popular after the FTX debacle. I think that's a great example. And I remember that at that point, Chainlink, everybody was talking about Chainlink because it was, well, how do we know that FTX is really holding those assets when it says it's holding them? And using an oracle to confirm off-chain, that this is what's on-chain, that makes sense. So,
Yeah, that's a good example. If FTX had been using proof of reserves the way we were recommending to them, they would have never, ever had that problem.
exactly.
Because the proof of reserve system would have verified and assured everybody with cryptographic guarantees about what their holdings are.
Right.
And so nobody would have been surprised by that.
Yep.
And the key thing to understand is that everyone in our industry is very interested in cryptographically guaranteed things. So Bitcoin is so valuable because it's cryptographically guaranteed that it works a certain way.
Right.
And that it's unmodifiable due to those cryptographic guarantees. But the question that Oracle networks answer is, or how do you verify cryptographically things outside of a blockchain?
Right.
Like FTX reserves, or a market price, or an identity, or a cross-chain connection, or all of those things together. And so it's actually a very, very interesting, exciting problem because you're creating a new way to verify the world and prove the world to another highly reliable system like Bitcoin or smart contracts in various forms.
Right. Yeah. It's almost almost like a two-way thing too, right?
It is two-way, yeah.
You're getting the data outside, you're verifying it so that it also matches whatever might be happening on-chain. Now tell me a little bit, so we talked about, that's the technical stuff that we said we would talk about. I think this was actually offline, but we talked about institutional interest in Chainlink as well, and you're working with institutional partners. We talked about JP Morgan. What's happening with JP Morgan and Chainlink? And why the interest from such a large financial services company, I guess?
So we announced here a few days ago at the start of the conference our work with JP Morgan and Ondo.
Right.
And I've been speaking to JP Morgan, I think now for well over 5 years, with multiple different groups. And finally we've gotten to a point where they are able to take their private chain, their private chain within the JP Morgan ecosystem, behind their firewalls, within their own infrastructure, and they're willing to open up access to that chain to the external world. And the external world in this case is another chain, Ondo, and on that chain there is a tokenized treasury. And so what Chainlink did is it created a cross-chain connection between the private chain of JP Morgan and the public chain of Ondo. And the JP Morgan chain played the role of executing a payment. It played the role of cash settlement and allowing two accounts to pay each other for something.
Okay.
And then the Ondo chain executed the asset delivery side of the transaction, where whatever you paid for on this chain was delivered on the Ondo chain.
Okay.
And the thing that was delivered was the tokenized treasury, kind of a yield sharing tokenized treasury, which is the type of next generation financial product that we're really talking about in everything that we've discussed. And so what is very interesting here is that you have an institution with this huge client base, which is JP Morgan, the largest US institutional provider of financial services.
Right.
So huge client base, trillions of dollars in potential liquidity, just from this one ecosystem that can flow into blockchain transactions.
Right.
And now there's a way how that client base can utilize blockchains outside of the JP Morgan ecosystem. So they use JP Morgan for the payments purpose, and then they are able to access assets outside. And so now all of this liquidity and this client base is now basically net new purchasing power that can access assets in the blockchain industry, which is great for the blockchain industry because now you have this larger user base.
Right.
That can access the all of the assets that are output in the industry. And this is what we're working towards with more and more institutions, and what we'll see more and more of. It is their client base at places like JP Morgan. We do a lot of now work publicly with UBS. We power Fidelity on production live for their tokenized funds. Okay. So we power many of the largest financial institutions already in different stages of going live, some of them live on production, some of them at the final pilot stage, some of them in POC stage. But those institutions going on chain in production means that all of their assets, all of their liquidity, all of their client accounts will now be blockchain industry accounts and blockchain-based assets, which is hugely valuable to our industry, in my opinion, because while there is a lot of retail demand in our industry, I think, us as an industry at 3.5 trillion, I don't think I've hit a ceiling. Maybe the ceiling is 5 trillion or 7 trillion on retail demand. But when you think about the hundreds of trillions in the institutional side,
right,
that's where the next stream of liquidity, that's where the next set of high volume users will come from. And that's what will grow our industry, because as you know, our industry grows on the basis of net new capital flowing into the industry. And so it's grown on the basis of retail net new capital.
right,
But I think that does have a limit. And that limit, in some way, if you want to understand that limit, you can think about the penetration levels by country. So if you look 5 years ago or 10 years ago, and there are these reports about crypto penetration, what percentage of people know about crypto? What percentage of people own crypto? What percentage of people have a wallet? What percentage of people talk about with each other or would vote yes for crypto legislation?
right,
Those percentages in developed economies are now pretty high. And in emerging markets, they're also relatively high. And once those percentages hit, 80, 90, 100%, that's it.
that's the cap.
That's
Yeah.
retail demand. And so and I think that cap is somewhere in the 10 trillion, maybe slightly larger than that range. But the institutional capital is hundreds of trillions.
Right,
And our industry needs that institutional capital, because if our industry doesn't continue to receive larger and larger waves of capital, net new capital, then it doesn't continue growing. And this is a very, let's say, growth powered industry. Like it's either growing or contracting. There's very little in the middle.
Right.
So we need to keep growing. Does that add up?
That makes sense. I talked to Chris Morris. He's with a company called Yellow Card, and he was talking about stable coins. He had the same perspective that, with the retail clients, we've stable coins, I think currently are at like 250 billion market cap, right? But once the institutions come in, like if the stable coin legislation gets passed and all the institutions come in, then we can go up to 10, 20 trillion, whatever the number is. The ceiling is much higher because of the capital flows. So totally agree with that. And we do see institutions here at Consensus are finally coming in. We've got some
This
financial
is the most
institutions.
institutional consensus I've ever been at.
Yeah.
The other consensus conferences were much more DeFi degen, and on the one hand, that's like a little bit sad in a way.
Yeah,
because,
I know what you mean. Yeah.
Because crypto has its own kind of character
and culture,
and culture, and people are running around in like capes and onesies, unicorn onesies.
I saw some of that today, but not as much.
There is still some of that,
Yeah.
and I'm actually personally a very big fan of that, and that whole kind of culture and kind of hippie-like goofiness
Right.
attracted me to this industry. It was like 100% that. It was like actually that with hyper paranoia, like the beginning, hyper libertarian hyper paranoia.
Right.
So I'm actually personally very attracted to that on a personal level, but that really can't take our industry past a certain point.
Yeah.
And I hope that as the industry grows and you have even more institutional adoption, that there is like a large and growing subset of developers and companies that still retain that culture. That's something that I really, really do want to see. That would be important for me personally, for it to be an industry that I feel like excited about. I don't want it to turn into just like an endless sea of people that wear suits, right? Like I wear suits now because I work with all these institutions and governments and so on. And so, wearing suits is a kind of like sign of respect. It's like a respect thing that you just have to do. But I don't want to come to this conference and just see everybody in a suit. Like that would make me feel sad.
Yeah, I mean, I know what you mean. Like it's, there's a danger of losing the identity of crypto, the grassroots that built the industry in the first place.
We want to keep the libertarian kind of control
ethos,
back to people dynamic.
Yeah.
Because that's like a valuable fundamental principle that this industry is built on, from the days when the only thing that was here was Bitcoin. Like when I got into this industry, it was just Bitcoin.
Yeah.
And like the nuance is that that can't be the only principle.
Yeah.
So the only principle can't be censorship resistance, and it can't be just that like nobody can take things from you. There have to be other things that all of this does to make it valuable, to make it mainstream.
Right.
And we do want it to be mainstream, but we don't, I think, as an industry, want to compromise some of the
core
things
values
that make it unique. Yeah.
And I think that's that culture keeps the industry in check, because, as you know, Bitcoin was created out of the 2008 financial crisis, and that was all institutions, right? The Bear Stearns, yeah. So we need to have that libertarian spirit still within crypto to keep the institutions in check, because they're just about profit and making as much money as they can. I just wanted to talk about, before we go into political stuff, because we'll talk about what how you got to the White House, and you met with the president, and you were representing the industry there, which is a great accomplishment. But before we get into that, you talked about a tokenized treasury. What is that? What's a tokenized treasury? You talk about JP Morgan and Ondo Finance. What does that mean, like a tokenized treasury?
So you basically take treasuries that you hold in an off-chain custodian.
Oh, okay. Treasury bill.
Treasury
okay.
bills, yes.
Got it.
Sorry.
Got it.
Like 10-year, 5-year, 6-month, 3-month treasuries. And the reason that tokenized treasuries have become attractive is because of the federal funds rate being at the level that it's at, in like the 4 or 5% range.
Right.
And so if you have a tokenized treasury on chain, you can use it to buy things, you can use it as collateral.
Yeah.
But you can still get the yield from it. So tokenized treasuries are attractive relative to stable coins, because stable coins generally in many cases keep the yield.
Oh, that's changing.
Right, now there are yield sharing stable coins.
Yeah.
So there's a whole spectrum of these financial products now that go from a stable coin that you hold, and the yield of the treasury backing the stable coin is kept by the stable coin issuer. Then there are tokenized treasuries that don't act as stable coins or methods of payment. They don't have as many, for example, DEX pairs or pairs that you can use to trade against them.
Right.
So they're not as easy to use as a form of payment, but they can still be used as a form of USD collateral.
Right.
And then there's a whole bunch of stuff in the middle,
in between,
which are like yield-bearing stable coins or tokenized treasuries that are more easy to use as a form of payment. And this even extends to things like money market funds that are essentially, I think, in many ways going to be viewed as a tokenized treasury or a stable coin. So this whole spectrum of what is a currency versus what is a treasury asset is kind of, in our industry, starting to be reinvented. And it can be reinvented in our industry because our industry can make all of these quick decisions to build new financial products around this spectrum of options, which in the traditional financial industry, you just couldn't.
Right.
Like if in the traditional financial industry, you tried to go and say, I'm going to make a treasury that we can also call a currency, and I'm going to make the treasury act as a bank account, but it's also going to act as a form of payment. Everybody would lose their mind.
Yeah.
Everything would become, everyone would go crazy.
They'll laugh you out the room, probably.
It'd be insane. It'd be like, listen, it's very nice to talk with you, but I think if you keep suggesting this, you're not going to have a job because we have this thing called compliance, and so it's really always exciting for me, and this is one of the things that I really am so grateful for in terms of DeFi, and so excited to be a part of empowering the majority of DeFi, is just like this consistent innovation, right? This consistent creativity of, well, is this really a currency, or is it a fund, or is it a token, or is it a treasury? And like really reinventing what all that means. And then you have people reinventing that in like every category of the financial system. So people are reinventing derivatives, people are reinventing trading through DEXs, people are reinventing lending through lending markets like Aave, which Chainlink has powered since launch. And so then you get this really great dynamic of like all these building blocks composing into these even more creative things. So this is the thing that I think some people understand, but is still not fully understood. And that's one of the reasons I also think our industry has so much more value to deliver and so much more growth, because once something is fully understood, it's kind of done.
Yeah, and you can squeeze everything out of it.
Kind of happened. Yeah. It's all done. Like email is done. Everyone understands email.
Right.
Everyone, that is done. Like you're not going to make email 50% better. You're going to make it maybe 1 or 2% better.
Right.
Maybe 10% better with AI or something. This whole thing is like 2% done. We're like at the 2 to 10% range. And there's like 90% left of this thing, which is like, it's very exciting to find out what is that remaining 90%. You know what I mean?
Yeah, yeah. That's great. I was confusing treasury, treasury bills with just
the treasury function,
corporate treasury, because I used to do some of that. So thank you for explaining that.
Yeah, of course.
Okay, let's talk about some of the regulatory stuff that you've been doing in Washington, D.C. So you recently met with the president and other representatives, Bo Hines and Brian Armstrong and the whole team. And you guys met with the president. Tell me how that came about, what you got out of it, and what you see happening in DC in terms of favorable regulation for the industry.
Yeah, so that came about, I think, because I was already in DC talking to many folks there, including Bo and other people in the Treasury and things associated with the White House. We were already speaking with congressmen. We were already looking and starting conversations with regulators. So I think it's because we were already active in DC. And then we were spending a lot of time explaining certain, I would say, key concepts around DeFi and making sure that DeFi can succeed and be regulated well from the US point of view.
Right.
Explaining certain dynamics about institutional adoption of blockchains and tokenization. Explaining certain things about proof of reserves, cross-chain, and various technical standards. And these things for the US economy, the US government, the new US vision of global leadership in cryptocurrencies and blockchains and digital assets, these are all super relevant things.
Right.
Like these are really key building blocks. Like DeFi is a key building block. Institutional adoption of digital assets and blockchains are a key building block. Technical standards for cross-chain identity data, key building blocks. And so we're basically in DC showing the congressmen, the regulators, the treasury, the executive branch, here's how these different key building blocks can work. Mm-hmm. Right? Here's how DeFi can work with traditional finance. Here's how traditional finance can work to allow international capital to flow into the US financial system. Here's how stable coins help with US dollar dominance. You don't want to regulate them out of existence. You want to encourage more of them. You want to make more stable coins happen. You want to make stable coin growth happen. And this goes to the point that we were discussing before of like, we really want this growing, robust ecosystem of many high quality assets, many high quality forms of payment. And the US also wants that, right? So
right.
It's actually, the reason I'm spending such a large amount of time in DC really is because it all makes sense, and our perspective and the value that Chainlink provides and the value that our community provides and the ideas that we're presenting to people are on the side of the truth. Like, it is absolutely, in my opinion, true that DeFi will make up a large part of the global financial system, and that the US economy wants DeFi to flourish in the US. It's absolutely true, in my opinion, that the institutional capital markets converting how they do payments, how they do asset issuance to a blockchain-based format will benefit them, will benefit society, will benefit the US economy. It's absolutely true that you need highly reliable standards, technical standards that everyone adopts to do transactions and to make scalable systems, global systems work. The internet's a good example, like TCP/IP, and we have CCIP for cross-chain connectivity as an example.
The TCP/IP of crypto, basically.
Yeah, the TCP/IP of crypto,
yeah.
Exactly. And so I generally like to provide things to the market and to the community and now to governments that make sense and are on the side of truth and are on the side of benefiting them and benefiting society in general. And so that's why I think now is like a really good time for me and other people like me that make infrastructure in our industry to spend time with governments, because they are in this like uniquely receptive mode. in like this uniquely open-minded mindset. And so that's why you're seeing so much activity from us there.
And is that what you're seeing? Like when you talk to these politicians, are they I know on the Republican side, they tend to be more receptive to it because obviously Donald Trump is championing crypto, which we talked about earlier because they were targeted and they understand the importance of crypto. But is that what you're seeing with other politicians across the aisle on the Democrat side?
Yeah, absolutely. It's a completely bipartisan economic issue. It's a non-controversial issue. It's a non-controversial issue for a few reasons. One reason is that crypto generally helps the unbanked. It generally reduces fees. It generally reduces monopolistic dynamics by large institutions. On the other hand, it also increases the US's economic competitiveness. It increases the US's economic growth. And it's also important to national security from like basically a global financial system point of view.
Right.
So both sides of the aisle get a lot of benefits to issues that they find very important. And it's a bipartisan economic issue. I think it also doesn't hurt that the crypto lobby and Fairshake have so much money to distribute to politicians that both the Republicans and the Democrats would like to have some of that money to successfully compete in their congressional and Senate races.
Right.
So I think the work of the large lobbying firms, the large PACs, and Fairshake in particular, has really shifted the government stance from like, let's kill crypto because it might be bad for consumers, to crypto's good for the economy, crypto can actually be good for consumers. Oh, and by the way, if I'm pro-crypto, there's like a couple of $100 million in campaign finance that I can receive. From there's like this big source of campaign financing now. That does play a part, right? So, and it's very important globally. It's not even just important for the U.S. It's important for Canada. It's important for the rest of the world. It's important for everyone because the U.S. is highly replicated by other countries and other regulators. So the work that, I also believe that the work that we're doing in DC to help DeFi be viewed correctly, to help infrastructure problems be viewed correctly, to help institutional on-chain finance be viewed correctly, will not just be impacting the US. Right. The decisions made in the US will then ripple out into kind of a certain level of global adoption. So it's actually working on the global scale of solving these problems, even though it seems like you're working on these problems in the US.
Right, yeah, I mean the US leads and then everybody else follows, at least for now. So how did you get it, you're so passionate about it, you're knowledgeable about it, how did you get into crypto in the first place?
So I got into crypto in 2010.
Ooh, that's early.
I was from the gaming community. So there were three groups. There were the cyberpunk people that actually know what anything was, how it works. There were the speculative, libertarian, I need crypto to avoid the government collapse. My crypto is mine and I will, be able to control it, and I'm libertarian. And I was partly in that group as well. But really the way I got into it was the miner community, basically.
Oh.
So I was an early miner, and I say I get in from the gaming community because a certain percentage of the early miners were gamers because they had GPUs.
Right.
And when I started mining Bitcoin, like ZG Miner and all this stuff, and then early on with other things, I basically kind of didn't even understand what it was. Right. I just understood that if I turn on my GPU, which is just sitting there, I'll get this coin thing. And I was like, okay, let's do it. And then I got the coin thing, and the coin thing couldn't really do much. But I just kept mining it because I was like, I don't really understand exactly.
You might as well mine it, yeah.
I was just mining it, and then I started reading about it, and I was like, what is this coin thing that I have? And at first I thought it was like a commercial private, I thought it was like a gaming currency.
Right.
And then as I read the white paper and I understood what it was, and I knew something about the history of digital currency, right. Like eCash and Beans, BENZ, and these things, back in the 90s.
eCash is really, still it's making a comeback in the Bitcoin community, but yeah.
And I knew the reason those things failed was they were associated with a private company.
Right.
And once I understood that Bitcoin didn't have a CEO, it didn't have a team, it didn't have a private company, I was like, I was looking at that, I was like, holy shit, like this thing could actually exist 100 years. Like you could actually have a system, I realized that the system could work in a way that was just like self-perpetuating. And that is like a really rare thing. Like people have been trying to make perpetual motion machines and systems that are very like low maintenance and like these like 10,000-year-old clocks, and it is very, very hard to make a system that has a chance of perpetuating itself. And I looked at it, it was like mind-blowing to me. And I still didn't understand it, but you know, like a year, 2011, 2012, I was still mining it, and then Litecoin I was mining also.
Oh.
and that stuff.
Yep.
And then you started to see these other tokens appear in other chains, and I just went all in on that, basically.
Well, that's a great story. There's a lot of people that came from the gaming community because they were used to trading digital assets and coins and everything.
I was from that side. I didn't understand at first.
Yeah.
I didn't understand, but then I got into it.
But you had a good insight into it. Unlike me, I was more like, this will never work, you know. But over time, because of the hype, I got into it.
I just turned on my GPU and I was just like, let's see what this thing is.
Yeah.
And I was like, I got like this thing. I'm like,
well, I hope you kept some.
I kept some, yeah. I, like everybody else, you know, should have mined more, and eventually I stopped mining on my own GPUs. I started mining on cloud GPUs.
Oh, okay.
Before the cloud companies understood what mining was.
Yeah.
And they didn't let you do it, or they, you know, it had errors and stuff. I mean, on the one hand, you know, you could say, oh, I wish I had more, or I wish I spent more time on mining and this stuff. But on the other hand, like all the time that I've invested in learning how to build things,
right,
is actually, I think, resulting in like interesting things. So if I had even more Bitcoin, but I didn't know how to build things, and I didn't have a way to like impact the world through building things,
right,
I'm not sure that I'd be happier about that. Does that make sense?
That makes sense. You know, hindsight 2020, but this is probably the best path, and you're doing great work. Sergey Nazarov, co-founder of Chainlink, thank you so much for coming.
My pleasure. Thank you for having me.
You're welcome.
Big fan of the Bitcoin community. Bitcoin, absolutely.
And we love that.
Absolutely.
Thank you so much. All right.
Thank you very much.
All
Thank
right.
you.